Alright, what's up, guys? Can you all hear me? Just let me know if you guys can hear me. And if you were here on Friday, I think the quality should be better. So let me know if it's any better. Alright, so I'm actually gonna get started with the dollar chart over here for me in general. Wait, Imran, can you hear me now? The audio should be okay. The audio should be working fine. It is on my end. But okay, alright, awesome. Alright, anyway, so yeah, for me everything starts with the dollar chart, right? You get a good feel for the direction that the market might go over the course of the week. Just by kind of getting a sense of where you feel dollar is gonna go. So we're on the second month of the year, right? So let's take a look. I'm just gonna start with the yearly candle. I mean, this is a super high time frame thing, but we obviously saw 2025. That was a very ugly close. That's one of the main reasons why I am bearish on dollar overall on a technical level, because on a higher time frame like the yearly, I'm just looking for lower. The 6 months doesn't look any better. I personally feel like we're gonna have a slow grind down all the way to here, the 88 level, but that's a ways away, right? And so this is actually one of the reasons why I'm bullish on a lot of foreign currencies, gold, silver, metal in general. Hold on, am I back on? I think it should be back on. Okay, sorry about that. I don't know, I think everything just cut off for a moment. But anyway, I think it's fine now. Let me just double check this and make sure everything's good. Alright, I think this should be okay. If you guys are seeing any issues, please just let me know. Like I said last week, I am new to live streaming in general. I'm slowly figuring it out. But yeah, I'm hoping to get better as we go along. For now, the main thing was I was trying to fix the quality. I still don't think it's great, but I do think it's better than last Friday. But anyway, getting back to what I was talking about with regards to the dollar. So yeah, I am bearish on this. In general, I don't want to see price trade up through that box. This is what I'm on a 6-month time frame. If I go down to the monthly, right? This is let's see. This is one of the things with when you've got so much uncertainty going on around the world. Dollar just doesn't give super clean moves. I mean, if we go to the weekly, you see this stupid range back in September. We're just kind of ranging, and then now we finally have a little bit of displacement lower, right? And we're it's kind of tricky. Hold on. It's a weekly fair value gap over there. We've got a swing level over here. And then if I go down to the daily, we're now trading in a premium for the dollar. Alright, so let me just gather my thoughts for this. There's a lot going on just because I'm trying to make sure that the stream is working on fine, so I apologize for that. But anyway, so I am bearish on the higher time frame, on the yearly, on the 6 months, and for the most part, this thing has been ranging, right, with such ugly price action towards the third quarter of last year. We got to move up and then move back down to end the year. And since then, I have been bearish, targeting these lows. Right, 1, 2. Granted, this one already dug down underneath it. But for me, I was just targeting those lows in general. Now that we have come here, the thing is, it's easy to get bullish. This whole thing, this whole price action last week, where price kind of rallied a little bit, for me is because of the whole dollar strengthening thing behind, you know, Donald Trump nominating Kevin Warsh. I don't think this is gonna last though. I'm still bearish on the dollar no matter what. We've come into a premium. We're trading inside of this fair value gap on the 1 day. Did I mark it on the 1 day? Yeah, on the 1 day time frame. Oh wait, no, sorry, it might have been the weekly time frame. Yeah, there you go. That's the one on the weekly time frame. And so we're trading in that fair value gap. We're at a premium. Kind of on the lower time frame, what I want to see now is I want to see a market maker sell model form. So market maker sell model, to just give you a bit of an idea, is going to be something along the lines of price going up, moving sideways, then going up again, moving sideways, going up, moving sideways, all the way until it reaches a key level. Once it reaches a key level, I want to see a structure shift kind of begin to form where now we start breaking down, right? And so now we got that bearish structure back to where we started from, which would be all the way down here. So that's kind of what I want to see, to be honest. These lows are going to be what I'm going to be targeting next this coming week. If we are really bearish, then I want to see price eventually dig down to these lows this coming week, right? 97.3. That's going to be the level to watch. But yeah, regardless, when it comes to the dollar index, I'm bearish. Even though we've had a rally for the last 10 days or so, I don't expect it to continue. In fact, I think this is a market maker sell model forming. Right, so that's just something to keep in mind for me. So given that, I actually want to see what happens to Euro and GU. Now, I'm actually more bullish on GU than I am on EU. One sec, I think the stream is messing me up again. I don't know why, but there's a lag today on my computer. Okay. If you guys see any issues, just please let me know, yeah? But I think it's better now. But anyway. Okay, so I'm going to look at EU, and I'm looking at futures right now because when it comes to Forex, I think the futures kind of just gives you a gauge, like allows you to gauge the strength of a particular currency without looking at it relative to something else. So for example, if you're looking at Euro USD, you're comparing the strength of Euro relative to the dollar, or if you're looking at Euro JPY, you're comparing the strength of Euro relative to the Japanese yen, right? But what if I just want to see if Euro in general is strong or weak or whatever, right? So that's where futures comes in. So the thing about Euro is that we just swept these highs, right? But at the same time, we had this candle 2 weeks ago. And what I'm thinking is very similar to the dollar. We've got this fair value gap that the weekly is currently digging into. I want to see a reaction pretty soon, though, on at least a 4-hour time frame to really maybe look for longs on Euro. That's the general idea, right? So I'm still feeling kind of bullish on this. But if you ask me which one has more strength between this and GU, I'm gonna open up GU now really quickly. And for me, the answer is GU. One of the reasons why is because I think GU also swept the lows. Wow, there's really a lag going on. But if I go down to the week, if I go back to the weekly, here we go. So we actually swept the lows for GU right there. Right, with EU we did not sweep the lows. We kind of made equal lows. We had these lows swept. Take out these lows, and now we're trending higher. And we got this engulfing candle. There's a fair value gap in there. Right. And so this is a level that I want to see respected again on the weekly for price to make its next leg higher. And again, it's going to coincide with dollar pushing higher as well. Sorry, dollar pushing lower. Okay, so that's EU-GU for me. Another thing is that these guys are at a discount. So when I say discount and premium, right? When you have a leg higher or lower like this, if you just draw a Fibonacci retracement, the 50% mark, the 0.5% mark, that's equilibrium, right? So when you're bullish and price digs down below that 0.5 mark, we say that that's a discount, and that's where you want to look to go long, right? Or those are the optimal places to look for longs, right? You think about life generally. When you want to buy something, you would much rather buy it at a discounted price than at a premium. So it's the same thing here. We want to see price dig down below that 50% mark, which it did, and then that's where we want to see the reaction, right? So with dollar, it's the other way around, where we want to see price go into a premium if we're bearish, because we want to sell at the highest possible price. So that's why on the dollar chart, I like the fact that we also dug up into a premium price point. One of the stronger pairs that I kind of noticed was actually the Australian and New Zealand dollar. So this is actually something that's been sticking out to me for a little bit. So I'm on the Australian dollar here, and there's some equal highs right there. Now, that's a long way away, but you know, if we can maintain this sort of momentum, I feel like that's going to be the next target for the Australian dollar. Now, this is actually really helpful in figuring out which Forex pair to look to trade over the week, right? If you can look at the futures charts of various currencies and figure out which one looks strong and which one looks weak, that's going to be the pairs that you want to cross. So, for example, I'm feeling bullish on the Australian dollar, right, because of the charts, the way it looks currently. We just bounced off this weekly imbalance. We got a daily volume imbalance. Now we've got a daily engulfing form right off of this candle, right? So there are a lot of reasons to be bullish on this chart right here. So that's the Australian dollar. But now let's say we want to pair that with a weaker currency. So if I just check out the yen, for example, yen futures, where is it? This one right here. If I zoom out into the weekly, take a look at this. This is just a straight on bearish trend for the yen for a long time now, right? And so because we have a strong pair in the Australian dollar, and we've got not a strong pair, but a strong currency, at least over the last couple of weeks in the Australian dollar, and we've got a weak currency for the Japanese yen, the optimal chart to then look at is AUDJPY, right? That's what you want to cross. You want to cross a strong currency with a weak currency, and that's the one that you want to trade because that's where you're going to get the best moves. At least that's how I go about it. So now if I actually look at the spot prices for AUDJPY, now take a look at that chart. It's just a clean trend higher for that same reason, right? With the Australian dollar getting stronger on the currency futures, with the Japanese yen getting weaker. When you have when you pair the extremes like that, one of the strong ones with one of the weak ones, you're going to get cleaner trends. Whereas when you just try to pair things randomly without really looking at the underlying trends of the currencies, you often end up in ranges that just look kind of like this. And that's not really fun to trade for anybody. So yeah, the Australian dollar for me and the New Zealand dollar, they both are looking pretty strong. The yen is the weakest for me. So going into this week, I personally am going to be looking for longs if we get them. If I get a good setup on Australian dollar JPY, New Zealand dollar JPY. I don't really post too much about Forex lately because my main Forex pairs that I was trading on Telegram was Euro and GU, right? But dollar was so tricky to trade towards the end of last year. So if I just go back to it, if you look at all of, let me clean this up a little bit. But if we just look at all of that, right, this whole thing, August till October, was honestly horrible to trade for the US dollar. I mean, you could even go back till like April of last year, right? Going from here to here, we've just been stuck in this really crappy range. It's hard to trade the majors as much, and Euro and GU, you can see it. If I just pull out Euro, we've been stuck in this similar range as well since last year, which is why I haven't really been looking for trades on Euro and GU as much as I would normally like. But sometimes the minors, like I just talked about, the crosses, Australian dollar JPY, New Zealand dollar JPY, those seemingly show more strength. So I'm going to look to be trading that instead. So I'll see if I don't forget. I'm going to post that on the Telegram. But yeah, that's really what I'm looking at for Forex going into this week. All right. Let's move on. Let's talk about gold a little bit. I think I kind of already shared some of what I was thinking about on Friday's live stream. Most of my thoughts kind of remained the same, for the most part. We closed that big gap. I think we still got a couple gaps lower though, but I don't know if we're gonna go close it. But for me, if I were, let's see what's going on. I think I mentioned I wanted to see, like, I personally wouldn't want to see price dip down below this 3,900 lows. That was a level that I mentioned. I don't know if I think I mentioned it on Friday, but I really wouldn't want to see price go down below that. In fact, if it could start to form kind of a range here, that would be better. Maybe sweep those lows. That would be pretty nice to me. We come down. We're at a daily fair value gap right now, right? Yeah, we're at a daily fair value gap right now. What I would like to see is for price. I know we're kind of ranging over here. We did get rejected on Thursday, but we kind of rallied back up Friday. But I would like to see price reject within this fair value gap. And when I say reject, I'm specifically talking about, going down a lower time frame and seeing what we saw on Thursday, which was once price gets up there and ranges, we kind of see a structure shift, right? And then we start trending lower. So right now we don't have that. We didn't get that on Friday. We kind of climbed back up into the fair value gap. We haven't really. There's no reason to just jump into a short for me or to be bearish right away. I mean, even though I have that bias, I'm not going to be acting on it until I see some sort of confirmation. We could come up, sweep these highs. That was the target that I set out on Friday. So we could probably get that going into this week early. I mean, we're not that far from it. Barely, 800 pips? And for gold, with the volatility lately, 800 pips is really nothing. Sorry, not 800 pips. More like 600 pips. 550 pips. Yeah, 49.60. Yeah. So like 500 pips away. We could go up, kind of sweep those highs as well. Right? I really wouldn't be surprised. But yeah, the moment we get a structure shift, the way we did here, where price just starts dumping lower, I'm going to look for price to come back down below these lows. And if we get down below this low, close down below it, then I'm going to be looking for these lows next, right? So back down to 4,500. I'm just double checking Forex Factory. I'm trying to see if what are the news, like what are the red folder news events coming out this week. We got core retails on Tuesday. We got NFP coming out on Friday. On Wednesday actually. So that's going to be something to keep an eye on. And then CPI, and then we got CPI on Friday. Oh yeah, this is going to be a busy week. We've got NFP on Wednesday and we've got CPI on Friday. So yeah, this is going to be a really volatile week, I believe. So I'm not going to be trading on those 2 days. At least, I'm going to be waiting for until after those news events are done to look for trades. But I am expecting some crazy action, so probably something to be safe about. But yeah, on the day of, usually when we've got the big 5 news events, so the big 5 news events are, the big 4, sorry, we've got FOMC, NFP, CPI, and PPI. Right? When one of those 4 news events are taking place, I try not to trade on those days because price action is usually really crappy leading up to the economic data release, right? Whatever time that the news comes out or the economic data comes out. So yeah, I usually like finding trades right after though, because after the first 15 minutes, you get a pretty decent idea of the direction if we're actually going to move in a particular direction or if we're getting a fake out or manipulation from one direction to the next. Usually about 15 minutes is a good time window that I like to see, that I like to leave to get an idea of which way price is trying to go after those events. But yeah, on Wednesday and Friday, because there's NFP and CPI, leading up to that 8:30 a.m. Eastern time when it actually is released, I probably will not be looking for actively looking for trades on those 2 days. But yeah, for gold, like I said, I want to see this level hold for now and then potentially move down to those equal lows over there. Silver already took out those lows, right? It had these lows right here at $70. I think I mentioned Friday that if gold does go for those lows that we looked at earlier, I wouldn't even be surprised if silver comes up, retests these order blocks, and then kind of goes back down. I do want to see a floor form around this level, though, the $55 to $60 level. And that was what I was talking about on Friday. I want to see a price floor form in this region. That's going to be the important part for me. Right? But yeah, going into this, there's no, if I'm bearish on gold on a higher time frame, it's kind of harder to be bullish on silver. I'd have to be bullish on silver, bearish on silver as well. At least I think one more leg lower is what we're gonna get. Right? We've got a bearish structure here. We've got a low, lower, high, lower, low. We got this fair value gap respected. We just swept those lows. I wouldn't want to see price go all the. We could technically go all the way down to these lows, but that's really far away. That's me being overly ambitious about what's gonna happen. I wouldn't worry too much about that. Right. Yeah, so that's gold and silver for me. I'm still looking for moves lower. I personally would like to see that region hold right at the bottom of that order block for silver, and then maybe catch a move down lower from there. All right, let's see. We got a couple more things to go over. So that's forex. That's gold. Let's take a look at NQ real quick. So I think Friday was kind of a crazy day, huh, for the stock market, just because I think ES and NQ were trying to go lower initially, but then Dow Jones made a new all-time high and pulled everything higher. That was kind of wild to see. Yeah, it was kind of a crazy Friday for Dow. But I mean, you look at this price action. This is another reason why futures just it's been tough. I'm actually gonna get a friend for you guys. He's a really good trader. Just recently got funded. He mainly trades NQ, and I'm gonna probably have him live stream once or twice just to kind of share what he knows with you guys for all those who prefer trading index futures. But for me, like this stuff, I mean, I don't like trading Dow anyway, but I think Dow was the reason why everything was pulled higher, right? This was the one that made all-time highs on Friday, going all the way up there. But you look at NQ, and it looks so different. Just because, I mean, we still have that crappy range over here, just like we saw in Dow, but we didn't make new highs, right? And in fact, I think on Friday, or was it before that? A couple of days before that, might have been Wednesday or something. The time before that I live streamed, I wanted to see these lows taken out, the 24,100, and I still think there's a good possibility. The key I am gonna be looking at if we do rally higher before pushing down is this volume imbalance right here. I would like to see this level hold. Yeah, I would like to see this level hold if price goes up. And notice it's also, that price point is also at a premium, right? It's above that 50% mark of this entire leg lower. I think this would be a nice place. I'm going to look for, yeah, Monday or Tuesday, see if it pops up there. And then, if we trade through it, then I think we're obviously going to go back up to these 26,000 highs. And then ultimately new all-time highs the way Dow Jones did on Friday. But for now, I'm still bearish on this. There's no reason for me to be bullish just yet on a daily time frame. Even here, right? I mean, there's that fair value gap at a premium. But yeah, I don't. This whole region is the level to watch for me. That 25,400, where I have the volume imbalance marked out, where I just marked the fair value gap, that little pink box. Yeah, so these are going to be the levels that I'm going to be watching for NQ. Yeah, so that gap, that's going to be NQ for me. I think ES did a better job than NQ did though. Right? Yeah, it's definitely pushed higher. We are. Oh yeah. See, these equal highs are definitely gonna get swept. You got these highs right up after that. Yeah, ES still looks better. But we've got a lot of liquidity sitting up above ES. Now, what I could see happening is if NQ goes up that gap, and ES, since ES is stronger right now, pushes up above these highs. There's also this volume imbalance right here that I wouldn't be surprised if price eventually traded back into, just like how if Nasdaq went back down to take out those lows. So it's gonna be another level for me to keep in mind. So Lee Marsden, which are you talking about, Nasdaq, or are you talking about Dow Jones? I'm guessing because there's no which top wick are we talking about? Was it on the 4-hour? Oh, you mean this? Was it the 4-hour one? Are we talking about this one? Let me know. I mean, my assumption is you're talking about this one right here, the 4-hour on Nasdaq. Yeah, I think you meant this, the 4-hour, because I didn't go. I personally did not go to a lower time frame than this. Yep. Okay. So anyway, the 4-hour. No, I don't really make anything much of it. I mean, it was the last candle on Friday, right? In my opinion, though, when we do see large candles like that, sorry, not large candles, but when we see large wicks like that, it often gets filled out to a certain extent anyway. Which is why you will see me trade engulfings, but not necessarily dojis. At least that's what I've backtested. Now I haven't backtested that with NQ, but I have with gold. Oftentimes you're given a really long wick in one direction that kind of looks like a rejection, because that's what we're taught with doji candles, right? That when you've got like a hammer or a hanging man or something along those lines, it's some sort of a rejection. We got a reversal coming, but I feel like to a certain extent we sometimes still get like a deep retracement into filling most of that wick out. Maybe we don't make a new low. Maybe we don't completely fill out that wick, but at least a large portion of it. But yeah, either way, for me right here, another thing to look at is that this was really the last PD array, bearish PD array, right, that we had on this leg lower on the 4-hour time frame, this fair value gap. Price basically traded up above it. The confirmation for me that, okay, I think this is bearish once again, or that we're not going for the gap that I marked up here, is if we trade back below this. Because right now, this is basically going to hold as an inversion fair value gap. So if we get back down below this, then to me, this was just, okay, a little fake out, came up, swept this high, whatever, right? Now we're going back down to, the level that I had marked below. But there's also, for me, the possibility that it goes up all the way to here, to that fair value gap, which also was coinciding with the daily volume imbalance, this one right here. Alright, so personally, like I think that going up here is definitely a possibility. And this is ideally where I'd want to look for the rejection, because like I said, right, when we're looking for, or when I'm looking for shorts or sells, or when I have a bearish bias, I'd much rather look for those positions in a premium. So this would be a really big premium, right? If price goes up to the 618, that's a really big premium. We've already kind of tapped it now if we're drawing a dealing range from over here from Tuesday. But if we draw it from the entire move from all-time highs, we're not quite there yet. That's actually coinciding with that fair value gap just about. So that's why, like, this little gap right here, this is where I'm looking at. And this candle itself doesn't play too much of a role for me because we've traded and closed above this fair value gap, making it an inversion. So unless we can basically trade back down underneath this, I'm gonna look for this level to get respected for price to move up here. Yeah, that's my game plan. And given that ES is so close to all-time highs, wait, sorry, not all-time highs, to the equal highs. We got the equal highs over here that I marked out, and then we got eventually these equal highs, right? I feel like there is a good chance that sometime during the week we do push higher. Again, ES also has, we've got a breaker, and we've got this inversion. Right, so yeah, I personally feel like we at least take out the highs first. I mean, we could always get an SMT where ES takes out a high, but NQ doesn't. But yeah, that's why that candle doesn't matter to me. I'm more worried. I would much rather see us break back down below the fair value gap. Yeah, man, no problem. All right. Well, just before I close this, I am just gonna talk about crypto really quickly. I think I wanted to see it close above 74,000. There's probably what 7 hours left before the daily candle closes. Yeah, 5.5 hours left. I don't know if we're gonna get back up above it, but if we don't, I don't know. SMT is when you have two correlated pairs, like ES and NQ, and one gives a liquidity sweep, but the other doesn't. And I don't use that as a signal in and of itself, but rather as a confirmation or as an added, like, confluence for a trade idea. So, for example, if you're bearish on a pair, and on top of that you see a SMT divergence between that pair and a correlated pair. So, for example, let's say I'm bearish on NQ, and I see NQ sweep the highs, but ES doesn't, and ES is already starting to move lower. That's like extra confirmation to my idea. Now, obviously, it's not as simple as that. You might it helps to use it in the right context, but that's the general idea of what an SMT divergence is. It's when you've got a correlated pair and one gives a liquidity sweep while the other doesn't, and it's often used as an extra confirmation thing to, like, to validate a potential trade idea. I'll try to give some more examples of it on the Telegram, just so people can get a better idea of exactly what it is. But anyway, so for crypto, yeah, I really wanted to see that weekly candle get back up above 74,250. We have not. I mean, we've got about 5.5 hours to do that, and honestly, it's looking pretty tough. But I mean, it is crypto, right? We've seen like $1,000 pumps easy. So yeah, just something to keep in mind. If we do get back up above it, I personally feel like we trade back up to at least 85,000. I feel like we're gonna probably get a bounce up to 85,000. However, I don't know if that's gonna last. Right? That's gonna be something to see once we actually get there. But I'm one of them people praying that we're closer to the bottom than the top. because yeah, like I've been in crypto since like 2018, and this is just honestly sometimes it's painful to watch, especially given that we never really got a real alt season, and Bitcoin is not good. Altcoins are not really going to go up without Bitcoin going up. If Bitcoin's bearish, then everything is screwed, right? But yeah, if we don't get up above it, I do think we're gonna eventually. There is a chance we go for those 48,000 lows, unfortunately, right? And oh, and I think this was the thing, right? So this is the Bitcoin USD chart. Last time I was looking at the USDT chart, and when I drew out the volume profile, the point of control had not been hit yet. Sorry, for the USD chart, it has not yet been hit, but for this one, it has. Yeah, I think, yeah, Lee. I think the same thing. I think there's a good chance we go there if we can't reclaim. But see, for the entire uptrend here, I was definitely looking at a different chart. This is just getting. Hold on. Yeah, I was definitely looking at another chart. But you see how that 68K level, it's so important because regardless of if it's actually the value area high or not, like for this pair, you see how this is coming in just around 67.5, right? That's the value area high. You don't want to see price break inside of it because if it breaks and closes, then price tends to rotate to the point of control next, right? But over here, it bounced off the value area high, right? And so this is one of the reasons why 68 was so big of a level for me. If I go to the normal BTC USD chart, it's not the value area high. Over here, the value area high was at 86,000, right? But this 68 level was a high volume node, right? That one right there. Again, 67.5. You see, it's actually the one with the longest yellow bar. And same thing. That's why 67, 68 for me was my target for Bitcoin on this move lower if we broke 74. But yeah, if we get through this, right, then the next high volume node is actually all the way down here, low 40. So I do feel like if we can't get back up above 74, eventually we're gonna go sweep that lows, and we might sweep those lows, and we might wick as deep as like 43K. No, exactly, Lee. I agree. Like it's crypto. Anything can happen, and that's what makes it so scary. I hope the same thing. You know, um, Especially for Solana, because Solana did take a big hit this entire move lower. Yeah, like this is ugly and painful to watch. So we swept those $78 lows that I had marked out from early last week. Same thing here, right? We broke. So this was what I was worried about back in October. I think we can go back in Telegram and you can see it. But when price broke back inside of this value area high, see how it's become resistance. It retests it, becomes resistance, and it gravitates towards the point of control as the next target, right? And if it breaks through the point of control, then obviously the final target would be the value area low. Now, unfortunately, once we got to the value area low, we retested this over here, and then now we broke through. So, yeah, it's painful. Lee, that's exactly why I actually don't trade altcoins anymore. Um, I just feel like Bitcoin is plenty, and I used to trade it a lot, like a lot, every day. But I took a step back from it as well, and primarily just focus on gold for the most part, forex, and then crypto has become more of spot for me for my high risk, you know, high risk allocation. But yeah, I don't ever want to see myself saying what you just said again, right? Where Solana screwed me with a long wick. I don't ever want to say that with crypto because I've learned my lesson for 6 years. It happened to me so many times. I honestly just got sick of it. But yeah, this was painful. We swept those lows, and honestly, if we break down, it's gonna be really bad. Like, yeah, we could go all the way down to like the $50 mark, which is, oh my god, that would be insane. Let's look at ETH. Oh, ETH. This is just as painful to watch. So yeah, some of these levels just, they're so good on a higher time frame level. Um, See, look, this is, I'm going to show you a little pattern here for Bitcoin, right? But the thing is, you can do this in hindsight, because I did this in the last crash as well, but it's very hard to actually follow through with it. But if you stay on the weekly time frame, Bitcoin actually gives some pretty clear, signs or signatures that the uptrend is kind of done. If you honestly, you just need market structure. If you just look at market structure more often than not, you're gonna see that, okay, wait a minute, I feel like the top is in for now, or like the bull market top is in. All right, so if I just go to the daily time frame, and let's go back to all the way here. All right, we kind of had this higher low, higher high, higher low, higher high, higher low. You just kind of had this trend then, right? But we broke down, and then we came back up. But you look at how the structure just shifts, right? Every time it breaks below a low and then forms the lower high, that really is the confirmation, right? That, okay, maybe the cycle top is in for now. And having seen that, right, over here, and then again over here when price, went up to 67, 68,000, broke down below these lows of 58,000. That really was, price telling you that, hey, its cycle top is in. And you see how it's doing that, or it already did that again when right here, the low really was this. We got one last kind of fake out above that, but when we broke down right here to that 98K level. That was it, right? That was like, okay, the structure is now bearish on the daily time frame. Then you get that continued move. You got a lower high. Then you got a lower low, and now you got this range with price kind of moving back to that weekly fair value gap that I had marked down from a couple of weeks ago. And then again, now we continue to trend lower, right? So like those signatures, they were there. That, hey, the cycle top is in. The thing is, a lot of us, myself included, because I did not sell a tremendous amount or anything, but so myself definitely included, that even though I've seen these patterns, when you see them again, or when I see them again, I still miss out on executing on it, right? I'm still working on building that faith in myself, or to just execute. We often know stuff, but we don't have the confidence to go through with it, and I guess that just happens every now and then. Especially with something like crypto, because a lot of what drives our buying is greed, right? We're trying to eke out as much profit as we possibly can, seeing the 1,000% gains. We want to be part of it, and so even when you see the signals that, okay, the market top might be in, that fear of missing out, that just prevents a lot of us from selling, and we just continue to buy more on every dip until we get the real dip, at which point we don't really have anything left in our pockets to 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 then buy, which would actually give the best returns. But I guess that's human psychology. But yeah, so those were really the things that I wanted to look at. I think I was just looking at ETH. I'm gonna look at Ripple as well in a moment and call it a night. But yeah, ETH is. Oof. See, this was a clear market maker sell model on the really high time frame though. So let's talk about that. just for those who want to know or get an idea of what it is, right? If we look at price, so I'll use a little bit of the replay mode over here. If we look at price until about over here, we had equal highs and we had equal lows, right? And when you've got a range with both equal highs and equal lows, that first move is often a manipulation, in my experience, right? Price fakes out in one way, and then you wait for the reaction for confirmation, and then you'll kind of see it move to take out liquidity on the other end. And I think that's what happened here, because I remember when we formed these equal highs back in December of 24, and I saw the structure shift on the daily time frame. So if we just go down and we see, take a look at that happening. So this is just over a year ago. Right, once we started to break down over here, like we broke down here, and then this rejection over here came down. I was leaning towards those lows getting taken out eventually, and we did. I remember this one day crazy crash that we had, but it went all the way down there. But everybody thought it was bullish. And by the way, this goes back to my idea of when you have really long wicks like that, more often than not they tend to get filled, right? Maybe not entirely swept, but they get filled. You got this long wick here. What happens? Price eventually comes and fills it. Right? People see that and they think, oh, it's a reversal sign. It's time to go long, and I don't think so. I think that's just too obvious, right? So that's not good enough for me. When I see something like that, that doesn't turn me bullish, which is why I don't really like trading candles with really long wicks, unless the context is a little better. But yeah, anyway, so price comes down, sweeps the lows, and notice how we're accumulating below those lows, accumulating, just kind of moving sideways. Created another low, and I think we got like a really nice bounce back. Right, there we go. And we got a nice bounce back, right? So all of this was the manipulation below the lows, right? And now what's happening is once price reclaims the range lows, then the next thing I'm thinking to myself is, okay, this is now going to form the buy side of the curve. We're going to go all the way back up to take out those highs. And that's why 4,100 was my ultimate target for much of last year before we just kind of stopped there and stalled, right? But when price went up, now you see how we have a leg, we move sideways, so this is accumulation again, right? Then we expand higher. We're going to have that next leg up. And this is exactly what the market maker buy model is. You've got these ranges and levels of accumulations, which I think we manipulated down first. But yeah, you've got these ranges and levels of accumulation, and then you've got the distribution happening or the expansion happening, right? And then you've got the next accumulation forming. And it keeps on going until it hits its level that it's interested in going to, which in this case for me was that 4,100 level, right? And then now once it hits it, and you see how there's the range, there's the manipulation again, and then now we break structure, and now you can tell that, okay, we're probably going to break down, then there's going to be that range again, then the expansion lower again, then that accumulation again, and so on and so forth. Right? You see that's exactly what's happening, right? We go down, then accumulate, expand, accumulate, expand, accumulate. And then I think that was the last one. And then we just decided to go all the way down. Yep. And now here we are, right? Now this is that next expansion. So, when you've got key levels like that, or key levels of interest, draws on liquidity, you get some really nice market maker models. For now, yeah, I don't know, ETH. I don't know if we're gonna just get a V reversal. Everybody hopes for it, but even when we came down here last time, we moved sideways before that happened. So it's very possible we just kind of get a range form here in the long run before the, as accumulation for the next move higher. Alright, then finally we got XRP. Again, you see that? Had a really long wick, and then we just grind it down, filled it out. Everybody sees this, they're thinking, oh, we got that liquidity sweep, and we got a really long wick. It's time to buy. Yeah, not necessarily. Same thing happened with Sui. I think Sui had one heck of a wick. Yeah, right there. And we still continue grinding down no matter what. Right? I think a lot of alts that really was the case. Yeah, H bar, long wick, then a slow grind down. So yeah, when I see those, I'm not really convinced right away. But with XRP, honestly, with this entire move up, man, if Bitcoin doesn't recover, I think it's gonna go all the way back down to under $1. Yeah, if Bitcoin doesn't recover, I don't see this forming a range over here. I think we go down all the way down to under $1. And I think for a lot of people, they saw this pump and they're all buying over here, and it's the exact same thing that happened back in 2017, 2018. I mean, Bybit doesn't have. Oh, wait, this is Binance, but I think a lot of, I don't remember which chart I was looking at, but the same thing happened back in 2017, 2018 when we had that move up to all-time highs that was absolutely insane. And then everybody was buying the top before it just finally dipped back down. And, just this accumulation kind of formed in that 20-cent region. So we had to wait like 6 years for the next leg higher. It's pretty insane, but I don't think it's going to be any different now unless Bitcoin recovers at this level. This 68 to 74 is just huge. Oh, I'm just gonna be on for another minute or two in case anybody has any questions or anything to go over. But that's kind of what I'm looking at. Yeah, I mean, I kind of gave an overall outlook, but for gold, for Forex, for NQ, at least those, I kind of mentioned what I was looking for this coming week and which way I was leaning. Alright, well, just gonna end that stream right here then.